Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, July 3rd, 2025. By the way, tomorrow the markets are closed. I probably didn't have to tell you that. The New York Stock Exchanges anyway, and so there will be no Tesla, Nvidia, SPY, or Triple Q, which we do on wickedstocks.com, for Friday. Obviously, we resume on Monday. So let's take a look at the big picture. Just to mention, this is the longer-term view. The low to mid 350s, our price ceiling, really through the rest of the year, because it's only if we can close above 354.78 at the end of any week on a weekly basis, what I anticipate possibly by the end of the year, that 517.12 5-year channel top. That almost happened the last time we closed above the 354.78 rising 2-year channel top back in November. We had the December high that rallied just short of that 517.12 formation. And if we close this week, today, that is, above 354.78, which is not likely to happen, but if we do so over the next few weeks, the low 500 region becomes a, by the end of the year, objective. Now, I'm going to just show, obviously, that we did close Tuesday below the 312.76 channel bottom, back above the 312.76 channel bottom on Wednesday. So we've made an adjustment. If you look on your price points, the support resistance column here on the far right, you can see we've reduced 312.76 to just an intraday support level. And I'm going to back up a little bit and just kind of show you our thinking. And, these are, we look at all kinds of line studies. We always have. I'm a big speed line analysis as well as a channel structure analyst. And every market has its own sort of idiosyncrasies. Some markets like speed lines, others like channel structures. It's been our experience over the last 3 or 4 years that Tesla, by a degree, not significantly, but by a degree, tends to honor channel structures more than speed lines. But in this particular case, you can see that when we fell away the last time, or about a month and a half, 2 months ago, from the low 350s, we fell to several meaningful support levels. One was the channel bottom itself, that you can see the black line now at 312.76. The other was the 5/8 downside Fibonacci, which is still at 272.87, a static level. But there's another rising 2/3 speed line that was also tested the day that we tested the channel bottom and the Fibonacci level. And that is, I don't want to get into how to create a rising 2/3 speed line, but it's basically drawing a trend line from the April low to the 2/3 pullback point, that 66.6% downside, and you intersect that point in the time frame of the high, and you have your speed line. And you can see that it also held back in early June. But we went with the channel structure as our trend defining element. The settlement below, we are anticipating longer-term bearish continuation. What actually played out was that even though we violated it on an intraday basis on Tuesday, we did not close below 299.68. We did close below 312.76, and we're back above it. So this is a long way for me to say that we are now shifting into the 299.68 as our base of support. This happens once in a while where we've got to backstep and make an adjustment.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and Nvidia, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
But it is what it is, kind of eating crow here just a little bit. Our regrets for those of you who may have played the short side when we closed below, the 312.76 channel bottom a couple of days ago, only to, I'm assuming you've bought it back by now, and if you haven't, that's something you should do. If you get an opportunity to buy 299.68 over the next day or two, that is an ideal scenario, but holding above 312.76 actually will keep this market moving to the upside. And I do think that we could possibly today see 333.03. So this sort of shows our 3 to 5 day and our 2 to 3 week horizon. Holding above 299.68 over the next 3 to 5 days, possibly today, we could see 333.03, this former channel bottom. It also lines up with the Fibonacci level. I forget whether that's 3/8 or 50% of the way back up over the last week and a half. But 333.03, able to contain today's highs. It is in reach today if we open and hold 312.76. So 312.76 is still a valid structure. And if we open above it, it can contain intraday selling pressures. And yes, above which we could today actually see 333.03, where a daily high can be placed. I would anticipate a likely daily high here at 333.03, but also know that holding above 299.68 will keep the low to mid 350s in reach again over the next week or two. And yes, if we were to close today above 333.03, which isn't likely, but certainly possible, then we should see the low to mid 350s within just another day or two of trade, say Tuesday, Wednesday of next week, closing today, Thursday, above 333.03. We should see the low to mid 350s again Tuesday, Wednesday of next week. And that is a zone, as I said earlier, that can contain buying through July, and we can continue to fall away each and every time. At this stage, it really is this wedge between 299.68 and 354.78. We could test the low to mid 350s, fall back to the 2/3 speed line, and continue to fill this wedge out through much of July. As I said, though, earlier, and it's not going to happen today, but if over the next 2 or 3 weeks we can close above 354.78, then we have a significant buy signal. I'm going to say through the rest of the year, 3 to 5 months. I think that would be the soonest, but it could take a little longer, 5/17/12 than expected. This is kind of, I would call it investment grade buy signal, if you will, kind of for the near term investor who likes to hold positions for several months, half a year before exiting on a longer term trade. Now, a downside, of course, we've got 312.76 and 299.68. If we clearly open today below 312.76, we can ease back to 299.68, which can contain selling through next week, and above which the 350s remain in reach over the next week or two. Now, in terms of, I like the swinging for the fences signals. This is a classic example. Closing about 354.78 at the end of a week, I'm expecting significant gains in the low 500 area. But because this market has rejected one sell signal, I'm a little gun shy to imply that closing below 299.68 would, over the next several months, result in the 160s. I think you can play it stair step right now, and what I mean by that is if we do close today below 299.68, we've got a 2 to 3 week sell signal down to 261.13. And this is a pretty classic channel bottom, well suited to contain weekly selling pressures, possibly through the rest of July. So you never really know. If you've got a weekly 3-star support, sometimes they can behave as a 4-star support. You just never really know exactly what may play out. But I will say that closing below 299.68, if you're a 2 to 3 week swing trader, you want to be short into the lower 260s where profits can be taken. And yes, 2 to 3 week swing traders can go long at 261.13, anticipating upward rotation back to the 299.68 speed line, possibly to what would then be channel resistance in the 350s. The 261.13 channel bottom would have a channel top then in the upper 340s, low 350s. And finally, it would be a settlement below 261.13 where I would be comfortable and confident anticipating the 160s as a 1 to 2 month objective depending on volatility. So closing below 261.13, your 160s are right about here on the calendar part of the chart. So they're below the 175, and I think you could see that within a month or two of closing below 261.13, we could see the 160.86 to 166.96 5-year channel support. So are we going to test the 160s by the end of the year? The answer for me is yes, if we close below 261.13, and no if we close above 354.78. It's about as simple as that. I hope this all made sense. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial on everything, including our stock picks. We did one earlier this week. It's an abbreviated week, so I think it's only going to be one stock pick this week. Symbiotic, and they are kind of a software AI company. You can read about them, or you can check out our stock pick if you want. They're right on the edge of a significant buy signal that, if elicited, should yield at least 20%. We're looking for more like 50% potential gains by the end of the year if we get the buy signal that we're anticipating. But we don't know if it's going to happen, and we only act once it does. So check out those specific details at wickedstocks.com. I'll be back, Sunday afternoon, Monday morning probably, with Monday's Tesla report. You have a great weekend, and happy 4th of July.